So why did the Fed just cut interest rates again? Actually, I think the main reason is that they more or less promised they would. And the Fed doesn't like to shock the markets. The data's ambiguous at best on whether a cut this time was warranted. You have got signs of labor market cooling, but we've also got persistent above target inflation. So those are the two elements pulling in different directions. On top of everything else, we don't have good data at the moment because of the government shutdown. It's like steering blind in a way. We've settled into a mode really where inflation is sort of stuck at roughly 3%. Powell emphasized that the inflation target is still 2%. The question is, will investors continue to believe him? And the longer we stick at 3, the harder it becomes to persuade people. Once people expect a higher rate of inflation, you're 9/10 of the way to getting higher inflation because their behavior changes to accommodate the expectation. If people get the idea that the Fed is so worried about what's happening in the labor market that it's willing to tolerate 3% inflation indefinitely, then that will be a huge setback for monetary policy. I think that's the biggest single risk. Once you're at 3 and you get trouble in the labor market, do you then go to 4? Once you're at 4, if there's trouble in the labor market, do you then go to 5? So I think there really is a danger here of a slippery slope.